Hi, I'm Wade Johnson, partner of Cutcher Neale Wealth Management, and I'm joined today by our portfolio manager Ryan Thompson to provide you with a market and portfolio update for the December 2025 quarter. As we move toward the end of the year, global equity markets continue to make progress. That momentum was supported by ongoing investment in artificial intelligence, easing inflation in key regions, and a more accommodative global interest rate backdrop. That said, performance was more mixed than earlier in the year. Local economic conditions and inflation surprises drove greater divergence across the regions. Regionally, equity market performance was largely positive, with the notable exceptions of Australia and China. Japan continued to stand out, with the TOPIX index rising 8.8%, maintaining its strong upward momentum. European markets also rebounded. The UK FTSE 100 rose 6.9% and the Stocks Europe 600 gained 6.5% as investor sentiment improved across the region. By contrast, the ASX 200 declined 1%, while the Chinese Hang Seng Index fell by 4.1%. In the United States, market gains were more subdued, but still positive. Both the S&P 500 and the Nasdaq rose by around 2.7%. In the US economy, growth surprised to the upside. Real GDP expanded by 4.3% in the September quarter, well above expectations. At the same time, inflation continued to ease, and the labour market showed signs of cooling. These developments allowed the US Federal Reserve to cut interest rates twice during the quarter, bringing its target range down to 3.5 to 3.75%. Elsewhere, economic conditions were more muted. European growth remained low but broadly positive, with inflation largely stable. Optimism around infrastructure and defence-related spending in Germany and improved fiscal clarity in the UK stood in contrast to ongoing budget uncertainty in France. Closer to home, Australia's economy slowed. Real GDP grew just 0.4% in the September quarter, down from 0.7% previously. At the same time, inflation re-accelerated. It rose 3.2%, then to 3.4% on the latest monthly readings. The Reserve Bank of Australia held the cash rate steady at 3.6%. However, markets began to price in higher interest rate expectations for 2026. This pushed Australian bond yields higher and weighed on local equity market sentiment during the quarter.
The Cutcher Neale International Share Model finished the year strongly, returning 6.12% in the December quarter. Performance was driven primarily by stock selection. Standout contributors included Alphabet, SK Hynix, Sumitomo Mitsui Financial Group, Eli Lilly, Siemens Energy and Monster Beverage. SK Hynix was the clear standout this quarter. It benefited from strong earnings and outsized demand for high bandwidth memory chips linked to the ongoing build-out of AI infrastructure. Alphabet also performed well. Concerns around competitive threats eased, and its latest AI model, Gemini 3, impressed markets. The Cutcher Neale Positive Impact Model returned 1.05% for the quarter. Key contributors included Vestas Wind Systems, Siemens Energy, Eli Lilly and Gilead Sciences. Vestas benefited from stronger profitability and new project wins across Europe and North America. Meanwhile, Siemens Energy continues to emerge as a critical enabler of the global energy transition and a beneficiary of rising AI-related power demand. The Cutcher Neale Australian share model faced a more challenging environment, declining 2.88% for the quarter. Local markets were weighed down by renewed inflation concerns and rising interest rate expectations. Performance was supported by avoiding several large underperformers, as well as holdings in the materials sector, including Rio Tinto, Newmont, Capstone Copper and BlueScope Steel, which benefited from good results and higher commodity prices. The Cutcher Neale Fixed Income Model returned 0.71% for the December quarter. Bond markets diverged sharply across regions. Australian yields rose on higher inflation, European yields remained relatively stable, while US yields fell following further Federal Reserve rate cuts. Active positioning across credit quality and duration helped the model navigate these conditions.
Overall, 2025 delivered solid equity returns, despite recurring bouts of volatility driven by policy shifts and geopolitical developments. December reminded us how quickly sentiment can change as new economic information emerges, but it has also reinforced the market's ability to absorb uncertainty without a sustained deterioration in conditions. As we look ahead to 2026, the focus will remain on inflation, the path of interest rates, and the evolution of global trade agreements. As always, I encourage you to reach out to your Cutcher Neale advisor with any questions or to arrange a meeting. We'll see you again in April for another quarterly update.